Good morning, ladies and gentlemen, and welcome to today's webinar. My name is Navina and I represent Capital Markets Malaysia. Today's webinar is hosted by the Sustainable Investment Platform, which is a collaboration between Capital Markets Malaysia and the Institutional Investors Council of Malaysia. And our webinar today forms part of a series of engagements that the SIP has put together to support asset owners and asset managers in their bid to provide sustainable investment options. So today's session is part of a two-day session. Today we have a 1-hour briefing on proxy voting and ESG best practices in the area of proxy voting. And tomorrow we have an hour on best practices in ESG standards. So I'd like to now just welcome our two speakers for today. We have Madhavi Botla and Faisal Michael from ISS Governance joining us from the US. If the session takes about an hour, and we'd like to welcome as many questions as possible and make it as interactive as we can. So you'll find that there is a Q&A function, a Q&A box at the bottom of your screen. You just have to click on that button, type in your question, and I think we'll be taking questions towards the end of the session. So without further ado, I will hand over the time to Madhavi.
Great, thank you so much, Navina, and also to Capital Markets Malaysia and Institutional Investors Council for having us present on such a timely topic. Again, my name is Madhavi Botla. I'm Vice President, Institutional Sales at ISS, and we are delighted to have you join us for this discussion on the ESG Best Practices in Voting Policies webinar. As background on Institutional Shareholder Services, or ISS as we like to call it for short, the company was founded in 1985 and is the world's leading provider of corporate governance and responsible investment solutions for asset owners, asset managers, hedge funds, and asset service providers. ISS's solutions include objective governance, research and recommendations, ESG risk data analytics and research, end-to-end proxy voting and distribution solutions, turnkey securities class action management, and also reliable global governance data and modeling tools. Clients rely on ISS's expertise to help them make informed corporate governance decisions. And usually I follow by the housekeeping rules, but thankfully Navina already did that for me. So I'm going to go ahead and skip over to introducing you to our speaker, Faisal Michael, who'll help us unpack the nuances of these issues today. Faisal has been the head of thought leadership for ISS Governance Solutions since November 2020. He brings an invaluable breadth of governance, client, and company knowledge to the role with over 20 years of corporate governance and ESG experience at ISS, including his prior role as ISS's global head of custom research. And as for the agenda today, I'm going to go ahead and skip over to this next slide. We are going to first focus on the importance of proxy voting, followed by the 2021 season and global trends. We'll start with the United States, where we're seeing the most proxy voting activity with both management and shareholder proposals, followed by Canada, Europe, Asia, and then Latin America. And then we're going to finish up with a review of global trends on environmental and social issues. And then, of course, we'll reserve some time at the end for some Q&A. And without further ado, I'd like to hand it over to Faisal.
Thanks, Madhavi. It's a pleasure to be here today and great to present to you all. I'd like to start my presentation on the next slide with a quote by Benjamin Graham and David Dodd from their book, Security Analysis from 1934. And it reads, as you can see on the slide, the choice of a common stock is a single act. Its ownership is a continuing process. Certainly, there is just as much reason to exercise care and judgment in being a shareholder as in becoming one. I like this quote because it's an old one, it's an old tenet, and it speaks to the importance of active ownership. Once you make a decision to buy a stock, you have to actively monitor your investment and make sure it generates sustainable return for clients, and if you're an asset owner, for plan participants and beneficiaries. And so from the moment that you buy the stock onward, you really have to engage and focus on good stewardship, taking into account global governance and ESG factors in the investment process itself, when engaging with portfolio companies, and when voting your shares as well. If we go to the next slide, the proxy voting process is important because it helps investors mitigate risk in their investment. It helps unlock shareholder value. And in some markets, there is a fiduciary obligation to vote as well. And some countries have adopted stewardship codes and corporate governance best practice codes that drive the voting process. But at the end of the day, the voting is a valuable asset. And as such, investors should apply the necessary care and diligence in utilizing that asset and not letting it go to waste. The overarching principles that we often see in proxy voting policies deal with enhancing value. So if you have poor governance, that means potential risk to your investment. Protecting shareholder rights, which means maintaining checks and balances, making sure that you have your rights as an investor, as a shareholder protected, so that you can monitor and check your investments and management of the portfolio companies that you've invested in. We also see as another principle, promoting accountability. Directors represent shareholders, and as such, they should be accountable to you as an investor, as an owner in the company. And last but not least, promoting transparency. And this is critical because investors have to have the necessary information in order to make an informed decision about their investments, about how they should vote their shares, et cetera. So transparency is another critical principle that we see in proxy voting policies, generally speaking. An effective voting strategy requires preparation and a thorough understanding of the process, and developing expertise in corporate governance, ESG, and proxy voting. Voting is one of the most important and powerful tools investors have in their toolkit to affect change and drive sustainable shareholder return from their investments. So we have many examples that show how real improvements have been achieved through active ownership, including issuer engagement and voting, which I'll highlight throughout my presentation today, and particularly when discussing key proxy season trends from around the globe, which were in large part spurred through engagement by investors in the process of voting their shares. So an effective voting strategy requires understanding the complete proxy voting process, from creating and setting up your proxy voting policy to doing research on voting items, to voting your shares, and reporting and monitoring of your voting activities. You have to apply a methodical step-by-step approach to get your proxy voting program off the ground, or to enhance your voting. It's important to have a good understanding of the increasing complexity that we're seeing in the governance landscape as well. So when designing your proxy voting policy, you have to make sure the policies are robust enough to take into consideration, particularly if you invested in multiple markets, local laws, regulation, and listing standards that vary market to market. Local best practice codes, if the market has codes that it has adopted, that helps you account for looking at what are the best practice codes that the companies, the portfolio companies that you invested in, are following, and which could diverge market to market. You also have to take into account actual company practices that could vary from the best practice code in the market, because many of the best practice codes that we see around the globe are on a comply or explain basis. So companies may not have to comply as long as they explain why they don't comply. So from a regulation and listing standards to best practice codes to actual company practices, what companies actually do on the ground, to disclosure, it's pretty important to focus on these issues. You also have to make a decision about how to resource your program and whether to outsource some aspects of the program in order to be effective in driving your proxy voting activities. This is where cost considerations may come into play. Finally, there are some challenges to voting that you have to be aware of and address. So moving to the next slide, while active ownership and proxy voting is very important in protecting your investment and driving sustainable return, there are some structural impediments to proxy voting that still exist, which you have to take into account when voting your shares. And internal challenges include lack of knowledge of local laws, customs, and listing standards of portfolio markets. We also see language barrier. Proxy material and annual reports may be disclosed in local languages, and generally no translations available. So markets like Poland, Russia, Greece, Turkey in Europe. In Asia, you have South Korea, Vietnam, China, and in the Middle East, Saudi Arabia, Qatar, Kuwait, that could be cited as examples of countries where companies generally disclose their proxy materials and annual reports in the local language. So if you have investments in such markets, then you have to take into account the language aspect as well because of that disclosure. And there's also some resource constraints that investors have to take into account, particularly due to tight voting turnaround times in many markets that you have to consider resourcing as well. From an external challenges perspective, substandard disclosure is certainly a challenge in Latin America and some Asian markets, MENA, where, again, you may not have all the information that you need as an investor to make an informed voting decision and to effectively monitor your investment. Vote cutoffs are other challenges another challenge that you have to consider and contend with, particularly if you're voting by proxy and you're not attending in person. Then the mechanics involve your custodian bank, sub-custodian bank network in order to vote by proxy. So from the time you have the proxy disclosure to the time you have to submit your votes, there is a finite number of days you have to action. So taking into account the vote deadlines is also another aspect that comes to mind. And the concentration of meetings is another one. There are some markets like South Korea and Japan, where a majority of the companies in those markets hold their meetings, their shareholder meetings, within a couple of weeks time. So if you have investment in such markets, then you have to vote your shares in very concentrated period, which could also be a challenge. In other markets, there are some voting mechanics that also that I've listed here that talk about the need for power of attorney in some markets like Brazil and Sweden, share blocking that's in place in Egypt, Argentina, Norway, share re-registration requirements in Switzerland. And in some markets, you have to have personal attendance at meetings, and you can't vote by proxy. In some instances, so markets like Taiwan, Thailand, Chile, Mexico come to mind. So these voting mechanics challenges are aspects that you really have to take into account and that you have to be aware of and must navigate through to make sure that your votes are counted properly and that you are having an impact with your program. Moving on to the next slide. One of the questions that that was raised to me to include was regarding the different types of available proxy voting policies that investors can utilize. And I've listed here the ISS benchmark policy. You can certainly use a third-party proxy voting policy and research in order to augment your proxy voting program. The ISS benchmark policy, for example, is a homegrown proxy voting guideline developed in consultation with our institutional investor clients globally. The policy goes through an annual policy formulation and update process and entails, investor and issuer survey, roundtables, market engagement, deep research by the research teams at ISS, and putting up policy update recommendations to a common period to get feedback from the market. So it's about a 4 or 5 months exercise every year that we undertake in order to develop, update, formulate the policy that we offer to our clients, the homegrown ISS benchmark policy. The ISS policy principles are focused on accountability, stewardship, independence, and transparency. And the policy focuses on the economic prism, looking at all issues from the long-term economic interest of shareholders, and it employs robust quality control as part of the process. So one of the options that you as an investor have is to use third-party research to give you research and recommendations on portfolio companies and on voting items in order to action your proxy voting program. Moving on to the next slide. There are also other policy options, and on this slide I've listed a number of thematic proxy voting policies that investors could utilize. The public fund policy is for asset owners, asset owners globally leverage that policy, and it takes into account kind of the pension fund manager and public fund sponsor and trustees' perspective to corporate governance, ESG, and proxy voting. We also have SRI policy for SRI investment firms and others that are interested in the SRI perspective. It takes into account the triple bottom line of value creation, looking at social, environmental, and economic considerations to investing and engaging and voting your shares. We have sustainability policy that we offer for UNPRI signatories or similarly aligned investment managers and asset owners that generally are looking to support ESG disclosure and policies in greater degree and want to take into account globally accepted international norms. So the sustainability policy is available. We've created a new policy called climate policy for clients that are very much want to focus on climate change as a central theme to their proxy voting activities. We also have faith-based policies, for example, for Catholic-based organizations. And finally, the Taft-Hartley policy, which is for labor unions, that takes into account the worker-owner view of long-term economic value creation and investment proxy voting. So these are the various types of thematic policies that clients could leverage in order to vote the shares. You can definitely leverage either the ISS benchmark policy or various thematic policies that fit your investment philosophy, your approach, in order to support and augment your proxy voting program. Finally, if investors want to design their own proxy voting policies, there's also a custom policy option that we offer. So investors have a number of proxy voting options, from off-the-shelf thematic policies to customized solutions that you all can leverage in order to vote your shares. With that background on proxy voting, I'd like to now turn to kind of key trends. And in this segment, I want to cover the types of topics you will need to vote on globally, and also some of the regulatory framework impacting voting. I'll be taking you on a global tour, but if you have mostly local investments, there's still relevance to you, because we're seeing continuous convergence of issues and practices. Some of the issues that emerge in one market are seen over time in other markets. So even if you're not seeing these issues in your local market today, certainly it will be good to have that context, because we're definitely are looking at trends globally. So with that, moving to the next slide, I think I believe it's slide 11. I'm going to start with North America, beginning in the US. So first, it will be no surprise to many of you that climate-related concerns have magnified tremendously, with shareholder proposals, say on climate votes and vote no campaigns in the US market. This year's highest profile proxy fight was at oil giant ExxonMobil, where a small investor, engine number one, made a convincing argument through a proxy fight for many investors, and won 3 board seats at Exxon. This is on top of spurring Exxon itself to refresh the board in advance of the meeting. Exxon argued it had done enough to fend off needing engine number one's nominees, but investors had a different viewpoint, and they were able to support the dissident nominees from engine number one for the Exxon board, which is kind of a watershed moment for 2021. Both gender and racial and ethnic diversity on boards have remained under the spotlight this year in the US. And there have been continuing improvements in board diversity. As well as more women on boards, there have also been some noticeable increases in racial and ethnic diversity, and how many US companies are disclosing information and their approaches to board diversity. Next, on executive compensation front, average investor support rates for the say on pay proxy voting proposals dropped compared to last year, and the failure rate increased to the highest rate since 2012, when the say on pay was first introduced in the US. And it was something that was imported from the Europe, actually, but now it's a regular staple in the US. And we're seeing evolution on that. Both the increased average dissent and the higher failure rate reflect investor general concern with a number of COVID-related pay adjustments made by companies, especially changes to long-term incentives, and in some cases, the making of special awards without good rationale. And one of the last trends is the huge increase in the number of M&As that we're seeing, including SPACs or special purpose acquisition companies. And this trend is definitely unfolding. And we're seeing a number of transactions, M&A transactions, and there doesn't seem to be an end in sight currently. With that, moving to kind of the next slide, one of the other significant changes seen this year was an increase in the number of failed US director elections to the highest level since the past 10 years. And more than twice as many as the recent low of 26 failed elections in 2018. And in the grand scheme of things, the number of is quite low. Even this year's high of 58 failed elections compared to thousands of director elections that occur in the US. But it is very symbolic given this is the highest level of shareholder concern that could be demonstrated by investors by rejecting the election of directors. That said, most companies will keep the directors in place, generally speaking. On this slide, as I mentioned a few minutes ago, many US boards have made progress with ethnic and racial diversity. The white line on the graph here represents the number of Russell 3000 companies with no disclosed racially diverse directors, down from almost half of the companies in 2016 to only 27% in 2021. The blue line represents companies with one racially diverse director, and the orange line those with two or more. As the graph shows, that orange line denoting the proportion of companies with two or more racially or ethnically diverse directors has risen from 22% in 2016 to 38% this year. This means nearly 3/4 of the Russell 3000 companies now have some degree of racial and ethnic diverse directors. This is a good example of a topic where investors develop proxy voting policies and engaged with companies following the challenges of 2020 with respect to race relations and the Black Lives Matter movement. And as you can see, company practice is shifting quite considerably as a result. So engaging in proxy voting, engaging with issuers definitely has an impact on company practice clearly. Moving to the next slide, the next notable trend is the continuing rise of voting support for environmental and social related shareholder proposals. Now, obviously, there is a wide range of topics and proposal types under this broad heading, but this 20-year trend and graph shows the trend in the last 10 years and even 20 years in average support levels, trending up now around 28% in 2021. I'll spend more time talking about ENS, environmental social proposal types, and the results in the last segment of my presentation today. Moving on to the next slide on proxy fights and contested meetings. In the US, here is the blue bar, which shows the number of US proxy fights from January to July each year in each of the past 12 years. And the gray line, the median market cap of target companies. The median market capitalization of target companies peaked at $670 million in 2019, but with only 15 target companies. That is fewer but larger targets in 2019. This year through July, the total number were back similar to 2019 levels, which is back to the pre-pandemic levels, but with much lower target median market cap. So essentially in 2021, the targeted companies for proxy fight and for contest are smaller in number. We do expect the number of targeted companies to rise as we continue to see a lot of activity in this area in the US. Now moving to kind of to Canada. Firstly, executive compensation, where this year more companies gave say on pay votes. But there are still no mandatory requirements for Canada. So, we have a patchwork of votes on the say on pay. For those that did go to vote, though, there were a drop in average support levels of above 1.5%, an increase in failed votes, a similar pattern in the US. However, unlike in the US, where median CEO pay rose to 2020, there was a slight dip in median Canadian CEO pay by about 2% across the main index companies. Climate risk and diversity were also high in a high-profile topic in Canada. And both investors and Canadian regulators focused on these two issues, climate change and diversity. Canadian Railway, National Railway Voluntary gave its shareholders the first Canadian Say on Climate vote and received 92% support from investors. To shareholder proposals at Canadian Pacific Railway and Royal Bank of Canada received 85 and 30% support levels respectively. And the difference was that the board of Canadian Pacific recommended support for the shareholder initiative, which is a first in the Canadian market where management is actually supporting what investors are putting on the ballot. So in addition to proxy voting, you also have investors putting shareholder proposals up, and in this case, the company actually agreeing with shareholders and supporting the initiative. So proxy voting and engaging and filing shareholder proposals have real life impact in the marketplace. Moving to slide 18, continuing with shareholder proposals, there was a notable decrease in the final number that we saw on ballots in Canada. This was due to a big rise in the number of withdrawn proposals that have been withdrawn by the proponents. About 2/3 of all shareholder proposals filed in Canada were actually withdrawn. This is another example of how proxy voting, investor engagement is having real impact. These shareholder proposals are being withdrawn because the company and management are engaging with the shareholder proponent and agreeing to make some changes, either to disclose additional information to investors or improve their practices in order to appease investors. It could be on environmental, social related issues. It could be just governance practices at the company, but these proposals are being withdrawn because investors are actively engaged and voting their shares, and companies are listening and engaging and taking action. Now moving to Europe for some trends. Next slide, please. Most of Europe, but not the UK, which is no longer part of the European Union, has been impacted by the European Union's Second Shareholder Rights Directive, or SRD2. Amongst many other areas, this introduced mandatory say-on-pay votes, properly called remuneration report votes, and increased disclosure for many companies in Europe. And first-time votes were seen this year, particularly in Austria, Denmark, Finland, and Sweden. In addition, shareholder approval of companies' future pay policies are also required, usually every 3 years. And it was the first submission year for these pay policy approvals in Germany, Norway, and Portugal. So a real mix of issues, compensation-related issues in Europe this year, and an extremely busy season with pay-related proposals and votes on top of many companies reporting their 2020 pandemic approaches to executive pay. Similar to what we've seen in North America, voting dissent increased in Europe and all markets where remuneration reports have been put forward. The likely reasons are first, where companies still have poor disclosure of pay and pay decisions. And secondly, changes to pay in the past year that were not sufficiently explained or justified by companies, especially to long-term incentive arrangements already in flight. that may have caused investors to vote against these executive compensation proposals. Moving to the next slide. Say on Climate was high on the agenda in Europe as well, and it's gathering steam in 2021 after only a handful of the first proposals in 2020. But in a first twist from North America, most of the 19 Say on Climate votes were actually put forward voluntarily by companies involved. These were particularly prevalent among most carbon-intensive industries. And again, this is another example where investor engagement and requesting to have a say on climate-related issues, a say on climate vote, spurred 19 companies in Europe to put that agenda item on the ballot for voting. So certainly proxy voting and engagement are bearing fruit in the European context as well. But I'll spend a little bit of time later on when I give you kind of a global perspective on the environmental social trends in a few minutes. So let's move on to Asia. And first I have Japan. The headlines from Japan season this year are improvements in board independence, and which is a long-term issue in Japan. And we also saw some developments around board gender diversity as well. The last issue that we did note in the Japan context is climate change as well. On board independence, over 90% of Japanese boards now have at least 2 outside directors, and over 70% now have at least 3. Vast change from only a few years ago when all insider boards were the norm. And again, a lot of investors in Japan, as well as globally, that invest in Japanese stocks, adopted policies around board independence, and that's really driving change in the marketplace. The number of female directors is also increasing, albeit more slowly and from a lower base than in some other markets around the world. For example, in Europe, where we see a robust pace of change around gender diversity. Over half of Japanese boards now have at least 1 female director, up from 43% to 53% since the prior year. On the climate related front, the first climate related proposal was voted on at Mizuho Financial Group this season, followed by 4 more companies seeing climate related proposals since then. Poison pills also made a comeback at a few companies in Japan where they tended to be targeted at specific potential buyers to prevent or to as an takeover device. But on the just normal broad-based poison pills, we did see a decline around that, where fewer companies were putting that up for shareholder vote. Moving to the next slide, focusing on Asia ex Japan. As you maybe already know, the main proxy season cycle in Asia starts with South Korea in March and ends with India in September. During this period, we did see some interesting trends, but in the interest of time, I'm going to focus on a couple of the markets where there has been significant development, which is South Korea and India. For South Korea in 2020, regulator introduced tenure limit for independent directors. This limit of 6 years of service in one company or 9 years, including service for an affiliate, continued to drive board refreshment for the 2021 proxy season. What we saw was that about 54% of independent director nominees were fresh candidates, brand new candidates to the board. We also saw more companies establishing key board committees. The regulation requires that companies with assets greater than 2 trillion Korean won must have an audit committee. Companies falling below that asset threshold should have at least an internal auditor, or they could also adopt and decide to establish an audit committee. This proxy season, the number of companies with an audit committee increased by 21% year over year in Korea. This increase seems to indicate that many smaller companies have voluntarily established audit committee because that is best practice. In terms of remuneration committees, even though there is no regulation requiring companies to establish REM committee, we did see substantially more companies voluntarily establishing the committee, with 29% year over year growth in this category. With these positive developments, we also saw some areas of stagnation, which is despite the government's efforts and governance reform in recent years, the number of founding family members on boards remained high. According to Korea's Fair Trade Committee, 81% of all holding companies had at least one founding family member on the board, which could create some conflict of interest, which is why the regulators and investors have been trying to unwind some of those approaches in the Korean context. Next up is India. First, the topic of director remuneration. Unlike some other markets during the pandemic period, what we did not see in India was a reduction in pay for executive directors, despite the weak financial performance of the companies. In some cases, we even saw remuneration increasing at a time when performance has been hit and employees are being laid off. So that disparity has been an area of concern for many investors in India, as well as globally, that invest in Indian stocks. Another trend that we're seeing is that the remuneration of non-executive promoters in India is increasing. This is an effect of an upcoming regulatory update requiring the separation of chairman and CEO as a best practice. More specifically, the regulation is saying that the chair has to be a non-executive director unrelated to the CEO, but it's not saying that the chair has to be an independent. So we're seeing a lot of promoters, founders, in anticipation of this new rule, transitioning to the role of non-executive chair, which is driving a spike in the remuneration profile of the company. But I'll spend a little bit more time when I cover regulatory developments in India. One positive trend we're seeing in India is that many companies have started adopting the integrated reporting framework and their annual reports, outlining some of the work done on sustainability initiatives, with increased disclosure on climate and environmental issues, social parameters, and pay equality, which is definitely a positive development, and in keeping with the global trends that we're seeing of whether it's in the US and Canada and Europe, where climate change, environmental issues are definitely an area of focus for many investors. Moving on to the next slide, in terms of regulatory and market developments in Asia, that will impact future proxy voting activities if you have investments. We have several developments on this front as well. Once again, I'll focus on South Korea and India because those had major developments, but I'll also talk a little bit about Singapore as well. So Korea is one of the few countries in this region that has board gender diversity regulation. Starting from August 2022, all large companies must have at least one female director. We expect to see a substantial number of companies complying with this requirement starting this upcoming proxy season. So I would not be surprised to see this requirement expand to cover smaller companies in the future. But gender diversity certainly is another kind of area where we're seeing convergence. It really started with the European countries adopting different kinds of best practice principles or quotas for the inclusion of women on boards, and those markets have really made a significant evolution. And now we're seeing other regions as well, for example, here in Korea and other regions like Canada, et cetera, also focusing on gender diversity as well. So certainly a global convergence and something that you may see in your market in the future as well. Next, let's look at developments in Singapore. In 2018, the Singapore Stock Exchange amended its listing rules on election of long-term independent directors. Starting from July 1st of 2022, under this new two-tiered voting system, independent directors who have served on a company's board for more than 9 years need to have shareholder approvals in two separate resolutions. First, from all shareholders, and second, from shareholders excluding directors, CEO, and their associates. So no affiliated shareholders voting on it. A number of companies have already adopted the two-tiered voting system in anticipation of the rule coming online. And so in 2020, ISS covered 10 companies in Singapore that have incorporated this two-tiered voting system. And in 2021, that number jumped to 70 companies starting to comply with this rule as well. This year, we also saw two major announcements by the stock exchange on the ESG front. Again, a theme that as you can see, that is growing globally. First, the new ESG platform with all stakeholders putting more focus on environmental social issues. Earlier this year, the Singapore Stock Exchange partnered with a fintech firm to develop an ESG platform to support listed companies to address the needs for ESG reporting. So definitely a development, good development around ESG in Singapore. Finally, there has been quite a few regulatory developments in India as well. The Reserve Bank of India guidelines for auditor appointments for the banking sector have been disclosed. Two important changes there. One is that auditors need to be rotated out every 3 years. And second is that all banks will need to have a joint auditor. So you need at a minimum 2 auditors doing a joint audit. This is the result of some of the systemic failures in the banking sector in the last few years, where the auditors were unable to catch some of the substantial risks. Therefore, RBI came out with this guideline in the hopes that this will alleviate some of the concerns that we saw in the Indian market. And the audit challenges are not exclusive to India. We did see some challenges in Europe in the past years. We've seen challenges in in China as well. Certainly when similar issues happen, then investor focus as well as regulatory focus is definitely warranted. The separation of chairman CEO that I mentioned earlier as well. This is supposed to be implemented in April of 2020, but there was a significant pushback from the corporate sector. So the SBI, the market regulator in India, pushed it out for another 2 years. And so this regulation will be coming to effect on April 1st, 2022. It's going to be interesting because most of the India still operates in a family-controlled structure where the promoters, basically have large stakes in the company. And historically, they have held the title of both CEO and chair. As I mentioned before, because the regulation only says that the chair has to be a non-executive director who's not related to the CEO, we're already seeing how some corporations are adapting to this and complying with the regulation by essentially changing the title of the combined chair CEO to a non-executive chair and bringing in a new CEO. So we'll see how this develops over time. Moving to the last slide on Asia and Hong Kong, the Hong Kong Stock Exchange published a consultation paper on April 16 of this year regarding a series of proposed changes designed to improve areas such as corporate culture, board diversity, board independence, and ESG disclosure and standards. And so, again, as you can see, the themes, similar themes, board diversity, board independence, ESG, are also coming up in the Hong Kong context, as we've been discussing in other regions. So it'll be interesting to see how these regulations, when they're rolled out in Hong Kong, will address these issues. All right, so moving on, and in the interest of time, I'll skip Latin America, but the slides will have a couple of bullet points on this issue. So going directly to kind of the ENS slides very quickly, slide 32. Over the past several years, we've seen an increase in the number of ENS shareholder proposals being filed and getting on ballots across global markets. As you can see from the chart here, in the past 4 years, total number of ENS proposals on ballot have increased globally. While a majority of these are still in the US, more ENS proposals are getting on ballot in more markets. Driving this increase are investor expectations, proxy voting by investors, and active engagement from investors, as well as regulatory requirements around ESG disclosures globally. Increasing more investors are shifting to view ENS issues as being material to shareholder value, and some investors and shareholders advocate putting forth proposals at companies with the goal of ensuring sustainable investments. And investors are also expecting portfolio companies to prepare for potential regulations. For example, in June, the US SEC announced short and long-term regulatory actions it plans to take on ESG disclosure topics. In the EU this year, 3 sustainable finance regulations are proposed. The Green Taxonomy, the Corporate Sustainability Reporting Directive, and the Sustainable Finance Disclosure Regulation as well. So this is definitely development, not just in Europe and US, but Asia, as I indicated earlier. Looking at the next slide, and climate change related proposals specifically, over the past 4 years, one of the strongest trends in shareholder activism has been the rise of coordinated, often global campaigns on climate related topics. The majority of shareholder proposals are still found in the US, but many other markets have begun to see more climate related proposals. Much of the engagement has been driven by Climate Action 100+, a coalition now comprised of over 600 global investors with more than 55 trillion in assets under management. This is yet another example of investors' active engagement in driving the climate change agenda with portfolio companies, including through proxy voting. Moving to the next slide. This just lists the most common types of climate-related shareholder proposals on ballots globally over the past 4 years, which we're requesting the state of goals to reduce GHG emissions and other types of proposals, and how those proposals are faring, but I'm not going to spend too much time on this in interest of time here. Moving to the next slide. In terms of just expectations for, this is my last slide, ENS proposals in 2022, the United Nations Intergovernmental Panel on Climate Change, IPCC, released a new report in August this year that concluded that human activity has already surpassed average global temperature rise of 1.1 degrees Celsius, and that it will be difficult for nations to act quickly enough to avoid warming the planet at 1.5 degrees Celsius, which would mean more extreme and deadly weather. Against this backdrop, we expect an increased focus on climate change related matters by many investors, including engagement with companies, filings of shareholder proposals, vote no campaigns, and potentially proxy fights similar to the one that we saw in the US against the Exxon board. Investors are increasingly expecting companies to disclose climate transition plans that show alignment with the Paris Agreement goals and achieving net zero emissions in the future. In the US, in our discussions with shareholder proponents, we've heard that more racial equity proposals will be filed in 2022, and the filing will likely be at companies where there are controversies related to racial and diversity related concerns. In 2022, we are also expecting societal issues to continue to spill over to corporate governance issues, and we do expect to see a number of proposals on fairness in the workforce, increasing pressure on companies regarding treatment of employees, and a shifting attitude around the focus on creating long-term value, not just for shareholders, but also for stakeholders, generally speaking. And many arguing that investing in employees and is a critical part of long-term shareholder value creation, and integral in growing the company from a financial performance perspective. And with regard to some of the COVID-19 issues, there's certainly tight labor market, and so advocates are arguing that a focus on workers' rights is an area of focus going forward. So with that, I will move to question and answer, and thank you for your time.
Thanks very much for that, Faisal. I don't see any questions here, and I think it was a very comprehensive presentation. So, ladies and gentlemen, I think that if there are any questions, please do pop them into the Q&A box now. Otherwise, we will have Faisal's presentation loaded on our website, so you will be able to refer to it. We will also have contact details for ISS on the website should you wish to reach out to them. So on that note, I will thank both Faisal and Madhavi for coming on. I know it's nighttime for you, so thank you very much for that. And thanks everyone for joining us, and hope to see you tomorrow. Bye.
Thank you so much,
Thank
everyone.
you for your time.
Take care.
Take care. Cheers.